Good morning, everybody. I'm Ed Parcaut, usually here with Mike Kelly, but he's in Vegas at a Remax convention. So he's playing, of course, because that's what you do at all conventions, right? You get to know a bunch of people, see what's going on. I'm sure he's checking out what's going on in the rest of the world to see how the rest of the United States doing with real estate. But a couple things today. It's kind of a light day. Most of the major news is Tuesday on this week, but I want to go through a few different things right now. Dow's doing okay. I don't have my little thing over here. It was up this morning at 158. I heard earlier it was going back the other way, but bonds are doing actually decent today compared to what I thought they would be doing. Just because, the news out there and everything else that's going on, you don't really know. We've never really been here before with what Trump's doing and the other stuff going on. So we don't really know how this is going to affect our bonds. But right now we're up 2 basis points and the 10 years at 4.40, open at 4.42. Just put in September of last year, we were all the way down to 3.65. And I kind of want to get into a little bit more of this. So one of the major stories right now is whether the government job cuts could actually help with the mortgage rates lowering this spring. The concern is that layoffs in the federal workforce and reduce the government funding could raise unemployment rate and push jobless claims higher. I know it's a bad thing. However, if this happens, the bond market's going to go, yay, and you will start seeing rates come down. It's funny how they always they go, okay, mortgage rates expected range between 5.75 and 7.25. Really? Thanks for that. The big thing we got to watch, though, is the spread between the 10-year and the current rates. That is a real thing that we've been talking about that for a couple years now. And that's why, and that had to do with a premium that people had to pay for to get their rate, because if you were going to buy a loan on the secondary market and hold on to it, you expect to hold on to it for a few years, like at least 4 years to make your money back. In this market, they don't know how long they're going to hold on to those loans. It could be less than a year. So they give them a premium up front to buy that loan. Otherwise, nobody would be doing loans because nobody would be buying them. All right. So right now, the critical factor in mortgage rates is the mortgage spread, as I was talking about. The difference between the mortgage rate and the 10-year is that historically it's between 1.6 to 1.8. That's normally. If that's where if we should be at with normally, rates be closer to 6%, not closer to 7.25 that we're kind of at. And I'm just throwing that as Fannie Mae throwing out numbers and Freddie Mac. Current mortgage rates are about 3/4 to 7/8 higher than they would be with normal spreads. So if 2025, the forecast calls for a slight improvement of 1/4 to 1/2 in spreads, that could actually help with lower the mortgage rates. But until we get those spreads down, we're not going to see a major change in interest rates. I don't care what they do. We're still going to have that spread. The easiest way to fix this is get rid of that spread. But we need to have stability to do that, and we don't have that right now. All right, what else did I want to talk about? Let's see here. I just have a little thing here. Pending sales, if you look at, all right, so let's back up. Purchase applications for the last few weeks in 2025. We've had 2 positive readings, 1 flat and 3 negative so far for mortgage applications. That means someone taking out a purchase or doing a refinance. If you look at pending contracts, in 23, we had 310,000 this week. In 24, we had 325,000. And in 2025, we had 312,000. There's like 742 and 54 and all that. I'm just doing the round numbers. So we are kind of closer to 2023, which was not a great year. Year over year growth has slowed, but it's still positive. We're still doing stuff. That's what you have to look at. Current inventory levels. We're currently up 2,230 from last week. That's 640,000. Inventory same week in 2024 was 497,000. So we're doing better than last year. And in 2015, we were 958,000. So we're about 300,000 off of that. New listings, if you just look at the listings, not the overall everything on the market. In 23, this week, we had 440,000. 44,000. What did I say? 440,000. Sorry, 44,864 in 2024. We had 51,387 in 2025. We had right now we have 53,861. So we have way more listings than we did in 23 and in 24, but it's still really low, if you understand what I mean by that. Price cuts. When we look at price cuts, Listing a property, what did it sell for? Have they had to have cuts in 2023? 31% of properties that got on the market had a price cut. In 2024, 30% of them. In 2025, 33% have them. Does this mean that we see values going down? I don't see that. I see that people are pricing them maybe higher than they should be pricing them. And then they're getting nervous, or this is going on. And so they finally lower it to sell. And remember, in all these numbers that we're talking about, there's about 130 some thousand condos in Florida that's in these numbers that aren't selling because they need major retrofitting. So key things that we need to watch for this week. Tuesday, we got FHFA Housing Price Index, Case-Shiller Home Index. Wednesday, we have mortgage application, new home sales. Thursday, initial jobless claims, GDP, pending home sales. Friday, the big thing this week is personal consumption expenditure, which is the Fed's favorite gauge of inflation. The Feds are having speeches all this week and could throw the markets off. The big thing that we're going to be watching is the jobless claims, and then the major one, the PCE. And that's basically what we're looking at. And good morning, Kevin Hawthorne from Florida. That's where we're at kind of today. It's kind of a short meeting. When I don't have Mike, I can just get you the facts. Going forward, I don't know if you guys heard this, but Facebook has changed their policy that when we go live on here, they don't keep this on here for more than 30 days. And so that will be fixed. So we're going to figure out what we're going to do with our plan. We're still going to do the lives. The question is, will we only go live on YouTube and now just on TikTok and Instagram? Don't know. We'll figure that out. We'll let you know what's going on. If you guys have any questions or comments, please reach out to us. You can you can email me at ed@edparcaut.com. You can reach out through here. I'm Ed Parcaut everywhere. You can just click on a message me, and Mike Kelly, you can see him. You can message him also. All right. Make it a great day. We will talk to you tomorrow. I should say I will talk to you tomorrow. Mike will be back on Thursday. I'll be here tomorrow and Wednesday without him. And everybody make it a great day and have a great one. Bye.